Okay, welcome back everyone. I'm going to get right into the stock market technical analysis. We'll go through the broad market, look at the tech stocks, and just anything else that's kind of interesting. So I'm going to keep the video relatively brief. Let's get right into it. Drop me a thumbs up, guys, if you're finding value in the content. So what we've got here, triple Qs. So on triple Qs, this is an hourly chart because, again, we're just kind of starting with the shorter time frames. On the hourly chart, you have negative divergence right there. Boom. All right, there's your negative divergence on both momentum indicators. You have this uptrend line that we're kind of walking up over the last, this is going back since when? June 7th, so a couple weeks basically. You got support, we held support, and then today basically gapped down and broke that trend line, okay? Little bit of buyers stepped in. The dip buyers obviously stepped in intraday, but they were not able to recover that trend line on the triple Qs. And so that's now been broken, all right? The negative divergence tells you that now it's kind of a sell the rip chart, and we likely will head lower. And where do we go to? Well, if I look at the hour or the daily chart here on triple Qs, the major trend that's been in place all year long for triple Qs is right down here. You can see all the tags of support. So that's where I think we head, is down to that trend line. Now, I don't exactly know when we get there. It might take a little while, or we could just drop right down there. But that trend line is the support area. So that's where the target would be. All right. If you're looking to short this hourly breakdown, the target where you'd want to cover is down at that major trend line, because that's the major trend on the daily chart. So you're likely going to get a bounce there for sure. So that's it on triple Qs. If I look at the SPY, again, we'll go to the hourly, just starting out there. There's the SPY, a little more cleanly defined than the triple Qs, but look, this is going back to May, late May. You got support all through here on the hourly. All right, negative divergence was building, so this was a divergent high right there. And then we broke trend right today. All right, you can see there's your breakdown. They did buy it up and did a back test, and then the selling resumed towards the end of the day. All right, second half of the day. So looking for lower prices, probably another gap down or something. We'll see. Where do we fall to on the daily chart? The SPY doesn't have as clean of an uptrend as the triple Qs does. And actually, if I adjust this trend line right there, this is actually a cleaner fit. I don't know what happened there, but you can see there's a low, there's some support, all right, and then we just hit that from underneath as resistance. But we do have good support right here, all right, lots of reactions right there, and that would be right down there at about 429, somewhere right in there. So from where we're at now, a drop down to that level would be about 1 and 2% or so. But then again, there's also good support down here at 411, right in that area. And that would be a drop from where we're at now of about 6%. So somewhere right in there. Again, I'll be watching the triple Qs as really my key indicator, because this rally all year long has really been limited to about 7 stocks in the tech sector, the large cap tech stocks. So for me, that's kind of the most important is understanding that those tech stocks. So let's look at those real quick. They have not really broken yet, some of these. All right, here's Meta, big. You've got this big bearish rising wedge. All right, it's been just well-defined bearish rising wedge all year long, wedging higher. And we're pretty much at the apex of the wedge. We could go a few more days and just still trade within this wedge, but it really does seem like it's moving time. And the probability says it breaks to the downside. You have negative divergence. You have a bearish rising wedge. Again, probability says we break to the downside. So there's a gap to fill down here. I think that'd be a viable target, about 214.20. And then obviously another gap all the way down here at 154. So those are the gaps that I'd be looking for. No sell signal yet on that one, just merely a bearish setup. So we need that to break. Let's look at Amazon. Amazon's got this daily chart, and I think we've started to break it here. It's not impulsive yet, so it's definitely not a definitive sell signal on Amazon. You start to see more selling, maybe a gap down or something. That might be the sell signal. Nothing quite yet on that one. But this most recent high, still a divergent high. All right, here's the thing. The former reversal candle, this one right there, that candle right there, okay, that's your former high. And then we made a new high over a series of a couple weeks right here, this price action. But if I zoom in, looks like, look, see those new highs in price still could not make a new high in momentum. So that's still negative divergence. All right, and that tells me that this is likely going to be a false breakout or a false new high, and we're about to sell down. There is potential trendline support down here, only potential because I have 2 data points, but we could come down and get another reaction and put in a third data point and validate that as a trend line. Okay, so that's Amazon, and then Google. We'll look at the parent company, Alphabet. This thing's just been sitting up here at this kind of a shelf of support, basically at about 122.27. I've got a potential trend line here. Again, not validated. I'm going to just get rid of it because it's really not an actual trend line. And it's just sitting there at that support. You can see here, this was former, it is clearly a reaction level. We had a reaction there. There's another one, and we're just sitting right above it. But we are diverging, all right? It is negative divergence. A new divergence basically has been developed in the most recent price action. Let me just kind of highlight that right here. All right, there it is. You'll see the momentum. Let me grab the line tool. Momentum's dropping off right there on both momentum indicators, while the price kind of just is kind of popping up and making new highs, diverging. So that tells me we're going to break to the downside. Now again, divergence doesn't give me an indication to sell. It's not a sell signal. You need to see us really start to break these, take out this support with a gap down or something like that. Some sort of a powerful sell signal will initiate, will be a trigger for short entries on that one. Nothing quite yet. And then Apple looks very similar to Meta, rising within this bearish rising wedge pattern, okay, with negative divergence. All right, it's still there. So you can continue to rise within the wedge. There's, a little bit more space left within this wedge. If I just extend this lower part out right here, we could go on for maybe another 2 weeks or so, but you're coming to the end of the wedge where you're likely going to resolve to the downside. It says the probability bearish rising wedges, they're bearish rising wedges because they typically resolve to the downside. And we also have negative divergence. So the more indicators that we have telling us of the probability of a direction, then the higher opportunity, really the higher probability we have of being correct on it. So again, no sell signal. Need to see this break down. And that's it. We need to see it break this lower support level right there on the daily chart. Microsoft. So Microsoft is, Microsoft's probably one of the stronger ones for sure because it's kind of part of the AI mania. You do still have negative divergence in the PPO. See it? How we're just made a kind of a slightly higher high on the PPO. And then the RSI, it did burn through it recently. You are starting to diverge there on the RSI here. So again, and we hit that resistance. Let me roll out. That was the all-time highs actually in Microsoft. 348 right in there. 348.70 or so. Popped it just briefly and has been selling. So not enough of a sell signal or anything on that one, but potential double top. We'll see. Definitely not, I'm not shorting any individual one of these FANG stocks. I would be interested in this Meta one. It's a pretty clean chart. Apple's relatively clean as well if we get the sell signal. But again, we don't have breakdowns of these wedges, so we need to just see those resolve. And then NVIDIA, and then I'll go through Tesla. NVIDIA continues to kind of ramp higher. It is diverging, all right? So you can see here, there it is. Not confirmed though, really. NVIDIA is still relatively strong, so I don't see any reason to get back into a short into NVIDIA. You have, you're making a new high. They're not confirmed, though, these divergences. So, yeah, nothing there on NVIDIA personally. I just don't see anything that's actionable quite yet. And then let's look at Tesla. That one's been pretty much going parabolic. Again, Tesla still looks like there's potential, a little more upside. I talked about this in our live stream, but here's the down. This is your bear market trend line. So you could rally up to there and still put in lower highs, all right, and still have, and this was nothing more than a longer term bear market rally. And then from there, you'd expect it to roll over and make a new low, all right, and continue the bear market. If you go on and break this and, you know, continue to rally and start putting in new highs, it changes the picture there. But as of right now, that's still intact. And then if I roll down to the hourly, you can see it's just been marching up this trend line on the hourly. All right, so just walking up this trend line. It is diverging now. You really had negative divergence starting on late last week, and it's continuing today. So that's telling me this trend line's about to break soon. But all right, you know, the resistance levels is overhead, so maybe it goes up a little bit more and then breaks and rolls over. Who knows? We'll see on that one. There's no sell signal yet. All right, wheat. So this has obviously been a pretty good trade over the last couple days. Wheat from the breakout, the wheat futures really in the last 3 days is up 13%. Pretty good size move in 3 days. Still sitting here at resistance though, okay? So you've got on the futures, you've got resistance, there's a reaction, there's one there, and then from underneath it was support. So we're right there at resistance. So easily could get a pullback. If we're going to get it, it's probably going to pull back and fill this gap here. And, you know, somewhere down there around 665 and then continue to rally up to the 200 and then probably get another pullback there. From my perspective, this one just started a swing trade to the upside, so I'm looking to buy the dips. I'm not really looking to exit, especially this early on in the breakout. I'd be looking more to buy the dips on this wheat trade. That's the wheat futures, and then here's the wheat ETN. This one, you know, I don't have a equal level as I do on the futures, but you can obviously see we are rallying pretty strong there. So pullbacks, you know, you got a gap to fill. I think that would be that's a zone, that's an area of support. So that's a buy area right there at 665. I would be looking to buy that, and I don't see it going too much lower. It could, but with this big bullish divergence that this thing has put in over the last year, basically, this to me looks like it's just getting started. So I'm looking to buy the dip as we continue to probably trend higher on wheat. Target for this one, at least in the, you know, over the next, I don't know how long it'll take, probably weeks, maybe a month, maybe 2 months, 950. All right, that looks like a pretty decent level. And obviously could take that out, but you know, that's a clear level of resistance, pretty well defined, so I could see us getting up close to that. Okay, gold. Here's gold futures, kind of selling off today. This one, you've got this trend line that, you know, you've got a couple reactions. You've got 1, 2, there's a third, and starting to break right here. It's, you know, that is a breakdown, so treat it as such, but it's not, it just doesn't look super convincing to me. When I go to the miners, on the miners GDX, you can see here, I've got 4 reaction points there. 1, 2, there's a third, and then, well, and now kind of a fourth, basically. We're really right there at support. So if they buy this tomorrow, that's going to validate that as a trend line again. And again, this is in an uptrend, so it's not something I'd be looking to short. You know, I'd probably be more interested in buying the dip here. I don't own it yet. I'd like to see how kind of tomorrow plays out, and you know, if the tech stocks continue to sell off, I'm interested to see if this catches a flight to safety bid. But we'll see. If they buy it tomorrow, I might start jumping back into some of these. And then a couple trade ideas I pointed out over the last little bit. CF, this is an agricultural kind of fertilizer chemical company. Again, there's your downtrend channel. Bullish divergence is intact and in play. And there's your breakout. So, yeah, I'm looking for higher prices here. You've got a reaction. This, you know, I'm not super in love with this resistance level right here. You know, it could be, it's just, I don't have a lot of reactions to help verify it. Up above is a little bit better, a little more clean. Right there, about 80, 86. So I like that as a target. That's a well-defined level. So I think we probably continue to ramp up to that 80, 86. Then you get a meaningful pullback. Okay. And then, but again, this is breaking out to the upside, so it's still by the dip. But that would be that 80, 86 is decent resistance on that one. And then we have CVS Healthcare. This one, you have a downward channel. You have, you can see all the reactions. We have a breakout and we have a back test. And that's all that is. It's a breakout and a back test. So it's objective. It was objective right down here. We're kind of rallying off that a little bit, and I would expect that we'll continue to run up and fill this gap, probably get a reaction there, and ultimately continue to move higher on that one. So I like that one as a potential long. DraftKings. So on this one, no position yet. You can see here this nice large bearish rising wedge. Okay. And it's well defined. You need a sell signal. You have negative divergence telling you you're going to get that sell signal, but we don't have the sell signal yet. And then if you can see here, today they broke down, but the buyers stepped back in and they recovered. They've recovered that wedge. So not a definitive sell signal. We need a little bit more, more selling to help define that sell signal. So keep an eye on it. Still on watch. And MasterCard, again, just stuck within the sideways chop range right now. I do believe it will continue to resolve to the downside, but we're just kind of stuck in this chop range. So we need to see these FANG stocks start to roll over. But, they're the market leaders. The rest of the market's going to roll over when they'll start rolling over. Because, again, remember, 7, 8 stocks have basically been responsible for 50% or more of the gains this year. And so those 7 or 8 stocks, when they roll over, they're going to drag the rest of the market with them. All right, guys, that's all I have. Please drop me a thumbs up. Let me know how I'm doing. I will catch you guys on the next video. Take care.